What's going on YouTube world? Austin Zaback here with another YouTube video, and in today's video we're going to be talking about where to invest $100, okay, in 2020. And I feel like $100 is just like the most common number that pretty much everybody has, right? So if you're watching the video and you don't have $100, then first you got to go make $100, okay? So if you're new to my channel, I appreciate you joining. On my channel, we pretty much talk every day about making money, investing money, saving money, okay, real estate, and pretty much like the stock market, okay? So let's just go ahead and jump right into it. In today's video, we're gonna be talking about the best ways to invest $100. And no, I'm not talking about $1,000, okay? And I'm certainly not talking about $10,000. We're just talking about very simply how to invest $100. I just feel like lately people are always talking about investing these very, very large amounts of money, right? And we talk a lot about real estate, obviously, and we talk about the stock market and all these different things. And there's a lot of different investments that do require a lot of money, but there are ones that you can basically invest with about $100, okay? So we're gonna go ahead and just jump right into it. And the beautiful thing really about it is once you invest that first $100, it becomes a little bit easier, becomes a little bit more natural, right? You start to learn about the different markets that you're investing in. You learn what you want, what you don't want, and there's all these different things that come with time. So let's just go ahead and just jump into it. Really quick, before we jump into it, if you're brand new to my channel, then you probably don't know yet, okay? If you're returning, then you already know what to do. Just take a quick second and just smash the like button. It really does help me out with the YouTube algorithm. I would greatly appreciate it. So way number one to kind of start investing, okay, to start investing that first $100 is through a Roth IRA. And a Roth IRA is essentially a retirement fund that has an interest rate that kind of builds on your account. You kind of get that compound interest over time. So there are two types of kind of like Roth IRAs. You have a traditional IRA and you have a Roth IRA. And kind of the difference between the two is that a Roth IRA actually sometimes is not taxed as long as certain conditions are kind of met. So these different IRA accounts really do have phenomenal tax benefits, okay? So I really encourage you to stay to the end of the video if you've never invested in a Roth IRA or a traditional IRA, and do so at the end of the video. So let's say you're 20 years old, okay, and you put $100 a month into a Roth IRA account until you were 65 years old. And your expected rate of return was about 7% on average. And your marginal tax return was about, give or take, like 25%. You would have an IRA account worth roughly about $366,000 by the time you were 65 years old on literally just $100 a month. These accounts honestly are truly just a great way to kind of get started in the world of investing. They're not very complicated to open up. And I just encourage you, at a very minimum, to just diversify and have a Roth IRA as kind of a part of your overall portfolio, right? You probably want to invest into real estate. You probably want to get in the stock market. You probably want to do all these different things. And I think that is honestly a phenomenal idea, right? But have a Roth IRA is just kind of something that you put on the back burner. Maybe you just automate, a couple $100 a month, or obviously $100, okay, to just invest into that particular account and just do that over time. And again, that's just my personal recommendation. Obviously, you don't have to take my advice. I'm not a freaking accountant. I'm not a CPA. And in no way, shape, or form am I telling you what to do. But that, honest and truly, is probably something that I would do if I were you. The second way that you should invest $100 in 2020 right away is through dividend investing. Even when you're only investing $100 into a dividend portfolio, it is still truly, in my opinion, a phenomenal way to go ahead and just get started and stop sitting on the sidelines. So many people, I feel like in 2020, especially, with everything going on in the world, right? They're just sitting on the sideline. They're waiting for the market to crash, the stock market to crash for a second time, right? We saw kind of what happened back in March, and they're waiting for that to kind of repeat itself. And the real estate market and all the different markets combined, and overall, they're just not getting started. So when you kind of invest into a dividend investment, you're making money off of the shares, okay, based on the company's overall kind of performance, okay? So very, very simple, I guess, in a nutshell. So according to balance.com, I'll read word for word how they define dividend investing, okay? Dividend investing is a strategy of buying stocks that pay dividends in order to receive a regular income from your investments. This income is in addition to any growth your portfolio experiences as the stock and it gains value, okay? So pretty much in a nutshell, dividend investing allows you to kind of get this regular income. Now, what I typically do when I do like dividend investing is I take my dividend and I reinvest the dividend, right? So I can get that compound interest over time. Now, you don't obviously have to do that, right? If you have a smaller amount of money and you want to take the dividend income and live off of dividend income, then you could definitely do that. There's a lot of YouTubers that talk about living on dividend income. You do have to have quite a bit of money invested if you probably wanted to live, depending on your expenses, just off of dividend income alone. But at the end of the day, maybe you can pay a couple of your bills through the actual dividend income. Because you've got to remember, with dividend income, you also have the stock itself or the collective of multiple stocks, okay? Maybe it is an index fund or something like that, or an ETF, where they're also, again, in theory, historically going up in value over time, right? As the stock market performs and, gets better, okay, and as time goes along. But the dividend income is something that typically gets paid out either monthly or quarterly or sometimes even yearly, again, based on that company's particular performance. And depending on what brokerage you're with, like I talked about earlier, and I definitely look into this, but you can actually have your actual dividends automatically reinvested if that is something that you're interested in. And as you know, once you kind of continue to grow your portfolio over time, it becomes easier and you ultimately hit kind of that exponential growth pattern, and you will get larger and larger as time goes along. So there are obviously a couple of different types of actual dividends, okay? A regular dividend is actually basically when you receive, kind of a piece of the overall company's earnings on, whatever time frame that is, okay? Dependent on the company or the actual particular stock that you're invested in, okay? And then there's a different type of dividend where it's more of like a special dividend. And basically it is if the company hits some big growth step or some big milestone, then you can get paid a dividend on that. Basically, it's just kind of an award, I guess, an exchange where, if the company kind of achieves, a big milestone, they have some big victory, they're kind of, sharing that with the actual stockholder. My third way to invest $100, and Dave Ramsey is gonna love me for this one, okay? So that is to actually go ahead and just pay off your dang debt. Okay, so according to DaveRamsey.com, a recent study actually showed that about 80% of Americans are caught up in the chains of debt, okay? So again, there's multiple different statistics out there on debt, okay? And how many Americans are actually in debt, all the way from student loan debt to automobile debt to credit card debt, and pretty much every kind of debt you can possibly imagine. Now, again, I'll save this kind of for another video, but there, in my opinion, and I'll go against kind of the grain of what Dave Ramsey would probably say, but there is such thing as good debt, and there's also such thing as bad debt. Now, again, I'm not gonna get into it too much, but what I would really encourage you to do is to pay off your bad debt. So credit cards are a great example of horrible debt, okay? You're like,
Austin, what is bad debt?
Okay, bad debt in my opinion is, an interest rate that is just like off the charts, way too high, right? So, good debt, you go buy a piece of real estate, right? In 2020, interest rates are really low right now. As a matter of fact, like I've talked about it in many of my other videos, definitely go check it out somewhere up here. But, I think interest rates in real estate right now are like below 3%. So like all time, like record low, pretty much, okay? Phenomenal time, right? That is good debt, okay? That is very cheap, and you can make, instead of paying cash for real estate, right? Let's just say you had like $200,000, right? Rather than paying cash for real estate, you leverage the bank's money, because the bank will give it to you at, like I said, like if you have good credit and, other various things, you can get that debt for very cheap, right? And then you can take that money, the cash that you would have bought the real estate with, and you can go invest it into something that'll produce a higher ROI, essentially, right? So you're creating arbitrage, and now that, in my opinion, that is good debt. But bad debt is debt where there's no way, without doing something illegal, that you're gonna make any more money on a year-to-year basis than having the debt, okay? So like credit card debt, you see a 17, 18, 19% APR. I've seen like 27% APR in some of these credit cards, and there's just no way that you're gonna take that cash, right, that debt, and make more money with it anywhere else. You're actually better off just paying off the debt. So look at your debt and really understand, what debt do you have that is good debt? What debt do you have that is bad debt? and take that $100 and just throw it at your debt, okay? Again, I know it isn't a lot of money in the very beginning, but once you do it one time, you can do it 2 or 3 or 4 or 5 times until eventually you don't have any more bad debt, right? Because you don't want to be paying that interest on that high of debt. I would even encourage you, if you don't have a lot of money, obviously the title and the thumbnail of the video is $100, right? But consolidate bad debt. If you have bad debt, try to go get a consolidation loan and actually consolidate your bad debt. You can even do a balance transfer card, okay? It's kind of like a consolidation loan, but it is a balance transfer card. They'll offer them. You can look like Credit Karma. You can look at all these different websites where they have the balance transfer cards. And at the end of the day, a lot of times they'll offer you like 0% interest within a certain amount of time, right? Or for a certain amount of time, and then you can take that $100 and you can really start to pay off that debt. And the fourth way to invest $100 with peer-to-peer lending. And this is a great option because you don't have to invest your $100 all in one particular place. With peer-to-peer lending, it is actually pretty much exactly how it sounds, okay? You're investing in other people and they're paying you back with interest. You're pretty much investing your money into peers, okay? So peer-to-peer lending. So typically the minimum that you can invest is like $25. So you could invest into up to like 4 different investments with as little as, $100. And of course, once you kind of make your money back each month with interest, then you can go ahead and take that money and you can start obviously making more investments. And just like a lot of the other things that we talked about, there are a ton of good platforms out there for peer-to-peer lending, okay? So I would just recommend you go ahead and Google peer-to-peer lending and do your research, right? Look at the different platforms. I don't have any one in particular. And, no way, shape, or form do I have sponsorships on my channel yet, but definitely do your research. There are a ton of great ones out there. And kind of the key aspect to this type of investment model is that you actually are never involved directly. Basically, the borrower and the investor are never involved. You're not interacting on any level, okay, at least from my knowledge and the platforms that I've looked into. So there's no like face-to-face, okay? There's all like basically you don't want that interaction, right? You don't want it to be emotional. Peer-to-peer lending is actually a great way also to kind of erase your debt and get rid of your debt, because a lot of times that interest rate is actually a little bit lower than kind of a traditional interest rate would be. But I would definitely look into it and check it out. And peer-to-peer platforms are pretty easy to actually maneuver, pretty easy for the borrower, pretty easy for the lender, and overall, I would definitely go ahead and look into it. And the fifth way to invest $100, okay, I know this is a long video. If you're still watching the video, by the way, I really appreciate you for watching. Go ahead if you haven't already and just smash that like button. It just helps me out a ton with the YouTube algorithm, okay? But the fifth way to invest $100 is actually what you're watching right now, okay? It's like YouTube and social media. Starting a podcast, starting a YouTube channel, buying a little camera, and actually starting to upload on the platform of YouTube is a phenomenal way to invest $100. You don't need a bunch of fancy cameras. You don't need a bunch of crazy stuff. I would just suggest that you have good audio and try to get like decent video. But normally an iPhone, if you have one of the newer iPhones, that will work just fine. Find a topic that people enjoy. You probably have a knowledge base in a particular industry and something where people are interested in that subject, and just go ahead and start talking about it. Find a target audience that keeps coming back time and time again to watch your content, and just watch your channel, over time actually grow, exponentially, and you can definitely make money doing so. Just think of something that you enjoy talking about, something that you're already naturally pretty good at. Maybe it is something that your friends, your family, people ask you about over and over again, and it can be anything, okay? It can be cooking, it can be like building stuff, it can be, making money, it can be trading the stock market, it can be real estate, it can be like literally anything. You can just make a YouTube channel and just entertain people, okay? You got guys like Logan Paul and Jake Paul, all these different people that they literally just entertain for a living, okay? So there's a lot of different ways that you can get started making YouTube videos. That's pretty much all I have for you in today's video. I really appreciate you watching. Again, my name is Austin Zaback, and typically we're talking about investing your money, saving your money, okay, business, kind of finance, real estate, and of course the stock market, okay? So I appreciate you for watching. If you haven't already, go ahead and just smash that like button. It really does, again, help me out with the YouTube algorithm, and I look forward to seeing you in the next video.